Hi, I'm Shakti Priyan, part of my Building Wealth YouTube channel. I'm presenting you this new video on financial tools that I am using, right? Financial tools needed for building wealth, right? What are the tools that is required to build wealth? So let me pass for the disclaimer. Let's continue. As part of this video, we are going to look at various things. So what are all the tools I'm using, part of my kitty that is there, which includes cash and bank accounts, insurance, investments, and credit cards and loans. So cash and bank accounts, the main purpose here is liquidity and easy access. Bank accounts are primarily used for, let's say, salary credit, bill payments, and daily expenses, running them through. In my earlier video, I have explained how I use multiple bank accounts, various flows, how money flows from one account to another for various purposes and so on. Probably you can take a look. And cash in hand, I think pretty much everybody's first form of money we are exposed to is cash, right? So, and again, this is primarily used for purposes where we cannot use a digital alternates like UPI or a credit card or a debit card. FD and RD, I've used it once. They are very tax inefficient and definitely not planning to use them anymore. Cash and bank accounts are primarily keeps money flowing smoothly for various expenses, right? Here there are like four different kinds of insurance that needs to be taken care of. One is health insurance, uh, primarily covered by the for the salaried employees. It's primarily covered by the company, and having personal health insurance is also preferable. So I will keep continue doing that. Term and accident insurance are required to cover any untimely demise. It protects the dependents financially, and also very important if there are large debt hanging around, like home EMIs or any large debt, right? So definitely that is that needs to be continued. And on the motor, yeah, it's mandatory for vehicles. So having that is not an optional. So yeah, have to continue having that there. Home insurance is one which protects properties and belongings. This also needs to be taken care if you are owning a property and you think there is a risk towards it. Insurance is the first line of defense for building wealth, so need to be taken care. So let's get into the main item, right? So what are the investments I am making? So what are the long-term growth for building wealth, right? So investments, long-term investments for building your wealth. Let's talk about equity. Here there are four different things. One, index funds, then active funds, then broker accounts, one for India, one for international. Out of these index funds, I'm continuing because they are average market performance, and it captures beautifully, and it's low cost and broad market. And looking at the active funds, I used to buy active funds, but not buying them anymore. I just I'm simply doing a boring index fund based building wealth, right? So regarding the demat account, I do have an account, but not actively buying stocks directly there. I'm pretty much happy with the index funds, and not doing the stock picking exercise. On US equity, I'm buying it via international broker. Especially I'm buying this Nasdaq 100 index. So there is a separate video where I have explained how I do this exercise. So let's talk about hybrid and debt funds. Arbitrage fund, predominantly used for short-term parking. Two use cases. One is this travel use case, yearly travels allocated monthly and parked in the arbitrage funds, and building any planned medical expenses. So these are the two areas where I am using arbitrage fund, which I will continue to do. Then the next line item here is this hybrid funds, which I am using it for my emergency fund corpus. There's another video on that. I can look at it if you are interested in to see how to manage emergency funds. And then the debt mutual funds, it was my debt component in my whole portfolio. Change of taxation in after April 2023 stopped me buying more hybrid or debt mutual funds. So debt funds provides a steady income and lower volatility. So the debt funds grows constantly. So let's look at one more category, which I am tagging under debt and hybrid, which is these retirement related products that are out there. So one is PPF, then EPF and NPS. PPF is what I'm actively doing. I'm covering up the max limit that's available today. So PPF is mainly long term. It's again a government backed scheme executed by the banks, and they are tax efficient savings and debt category. So I'm maxing them out. So EPF, it's again you can part of the salary where it's getting credited into your PF accounts. So this is another way which you can build wealth. But yeah, I'm not taking that route. I'm just keeping it minimum. And then talking about NPS with its limited flexibility and withdrawal constraints, it is the only reason I went into NPS was there was a in old tax regime there was a 50,000 tax deduction that was available for NPS. So that was the only reason why I ventured into it. But I'm not actively contributing to it. I'm keeping that minimum. Let's talk about gold. Gold acts as an inflation hedge. It provides diversification in the portfolio. Traditionally, we are exposed to gold via jewelry. Gold ETF provides a lower cost option to buy gold in a steady, consistent way. So this is what I will be preferring for my future investment into the gold asset. And gold mutual fund is what I am currently holding, and it is already overweight in my portfolio. So I'm not buying gold anymore at this point. But when I start resuming, when I resume buying gold, it should be primarily gold ETF, not really a gold mutual fund. As gold mutual fund in turn holds gold ETF, there is additional cost mutual fund companies, AMCs are charging towards that. And the other interesting form which we are familiar with the gold is a physical gold where we buy it as a jewelry. So that is also is planned part of the monthly allocation where we go and contribute towards buying a gold jewelry scheme and so on. So gold primarily acts as a portfolio stabilizer. So when the markets are down and when the equity goes down, gold is what goes up. So the correlation between gold and equity typically is in a negative correlation. So this acts as a portfolio stabilizer. So let's talk about real assets, right? So they are tangible assets for utility and lifestyle. House and vehicles mainly contribute this particular segment. So house we should treat it as a for house we can have it as a primary residency with some potential appreciation. For vehicle it should be treated as a utility, not really an investment. So we need to manage the depreciation of the vehicles sensibly. So essentially this offers stability and also comes with an ongoing cost. So we need to be careful about them, and we should avoid adding more of these things into our portfolio. Credit cards and loans. So smart leverage and cash flow management using credit cards and loans, right? So credit cards, you can use it responsibly for rewards and for short-term credit, which I will be continuing. And on the loans, avoid for consumption, like probably consider for appreciating assets, like let's say if you're buying your first home. So we can use credit, but we shouldn't let it use you, right? So using credit, we need to do it responsibly, and using credit is good, but not at the term where we end up being a bank for the bank. Let's summarize the whole thing, right? So these are all the financial tools that are there in my kitty. So if at a high level, it's liquid, insurance, investments, and credit. In case of liquid, there is a cash and bank accounts. Bank accounts, I spoke in detail in earlier video how I manage various money flow. And insurance, I'm covering medical term and vehicle. And for the investment, I'm having gold, then debt and hybrid funds. Then there's a equity index fund. Planned short-term activities, I'm using the arbitrage funds from the debt. And PPF is one product which I'm using in the debt category, which is again long-term. It's just a part of the portfolio. And in the equity, I'm buying index funds. One is India-based index fund, other is US-based Nasdaq 100 is what I'm buying at this point. And on the credit side, there is a credit card, like various credit card, each offering its own benefits and so on. Thank you for watching the video. So if you find these helpful, please share with your friends and family. Probably we'll go in depth in one of these area in the next video.